everyone, welcome to Monday's free newsletter. I can't believe that the UK has now become Antarctica. It was getting like really quite nice and pleasant. It was cold, but you know, getting these lighter mornings, lighter evenings, which is just so nice. God, I really don't like the dark. And now again, woke up this morning, snow, still snowing. And I've got Dean coming over to the office. We've got to sort out computers and stuff we're doing for a trading course and blah, blah, blah. Anyway, stuff you're not interested in, I'm sure, quite rightly so. S&P futures. So bear with me, I'm always a bit slow to get going on a Monday. I think one day of relaxation on a Saturday seems to bring my whole body to a shuddering halt. It takes me about 7 or 8 hours to get going on a Monday. S&Ps are rallying smack into the 61.8 fib retracement levels from the recent highs to the recent lows at 1106. In between this 1106 1108 range where we're trading now is really the last chance for the bears to take back control from here. I'm not really interested in playing this. I was initially going to play the break above the 50, but then to my eternal shame I hadn't put the fibs on. When I did put the fibs on, I realised I don't want to play it smack into this fib level. After that, we're looking at 1116, the high from up here in January, as our next resistance level, but we really need to break through this level here. We're looking to get long. If you look at it really, I know it sounds a bit strange sometimes, but the bears are still in control until this level's bought, because the 61.8 is the last retracement level where you can say, if it breaks through and closes above the 61.8 retracement level, then you say, okay, that's over, the pullback's over, stock's now moved into a short-term uptrend. But until it does that, it's still in this short-term downtrend, which has really rallied pretty hard. I'm surprised how hard it's rallied. We are getting an 821 EMA cross, we are above the 50, but that's it. So we're just going to wait and see if we get the close above 1106, 1108, probably a bit better, 61.8 retracement. Indicators are lagging a bit behind here. Now the real test is going to be if the indicators get up to 65, the RSI, and if they top out from there. And when the RSI tops out at 65, that tells us the stock is in a downtrend. Let's go and take a look at a position that we have. I don't know if I mentioned it in the free newsletter. We took it in the members area. It's not a huge position. We've just took a quarter size position in Aussie dollar, Japanese yen. So far we took it off this pullback to the 50, so we're just in the money nicely, but because it's a small position, not a huge profit. Really, this trade is really going to get going when we come and take out the levels up here, the highs, which are at 86.20. Once them levels we'll be looking to add again, but of course it's a nice 4-cent ride up to here. We don't want to miss out on. If it's going to happen, then we'll add to it again, so by then we'll be nicely in the money and looking to add. We are getting sort of things setting up. Are we getting an 821 EMA cross here? The 8's crossing above the 50. It's all looking pretty good technically. The one bit of concern we have is we could form a sort of potential head and shoulders, which is, we've had a sort of this part of this downward trend here. So, we're just at that level now, and really no surprise that we are getting a little bit of resistance here. So we can move through these levels about 83, should be okay to go higher. The reason we like this stock, plenty of stuff going on in the markets with the Fed increasing discount rates, and I discussed that more in the members pre-market report, because I've had a lot of questions about that, very good questions, so I'll go all through that, yield curves, etc., why people initially sold the short end of the yield curve, and now they're probably looking to sell the back end of the yield curve, and just look like the yield curve would go flat. Now it looks like what they're doing, it will steepen, and blah blah blah. So I'll go through all that, but part of everything where we're seeing stronger stock market, weaker bond market, all of this leads us to want to be short Japanese yen now. Risk aversion sort of coming out of the market. That can all change very quickly, so we need to be nimble, but that's sort of where we're at now, so that's how we're playing this stock. Okay everyone, that wraps up the free report for Monday, which is dark, snowing, and what a lovely way to start the week. But we've got to keep going. It's very, very interesting times to be trading the market. Just a quick one, I've been told to sort of say this quite regularly because it's my company, but I get told what to do. That tells you what a strong man I am. is that if you're watching this video, you can take a month's complimentary membership to the Genius Trader area, which gives you access to the members pre-market report, which is a lot more in depth. We talk about the positions we have, what's happening in the markets, how we're playing the news that's happening in the markets, like discount rate, yield curves, all this sort of fun stuff. You don't take any credit cards off you, so you just have a month and then decide, yeah, I'll carry on with these jerks, or I'll leave it and just move on and try and find someone who's got a bit of common sense when it comes to the markets. So I think that just about wraps everything up. It does. No point me going on anymore, because it's, probably got better things to do. Listen to this. I look forward to speaking with you again tomorrow. Until then, happy trading.